Hey guys, welcome to this week's Money and Investing Show. This week we are providing an outlook for the US economy. Just back hot on the heels of a trip over there, and some of the anecdotal evidence that I saw over the last week or so will certainly help you set out your stand for a great trading environment for the next quarter. Take plenty of notes, most importantly, take plenty of action. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Laurential.
Thank you for having me on the show, Mr. Baxter. And today, funnily enough, we're going to be talking about things hot off the press. But before we do that, nice suit. I think it's the same as mine.
It's very similar but different.
Similar but different. Yours is probably 5 times the price of mine. But anyway, parking that to the side. Hot off the press. You've just been back from the US. Hopefully the flight was okay for you.
Oh, don't get me started on travel at the moment. I think that's something I'd choose to shelve for another 6 months if I can. It was a slog, but worth the trip nonetheless. Some great insight and some good business. So yeah,
which is exactly what we'll talk about today. So really, the whole mandate for today is to talk about the stats, the eyes and the ears of the US economy.
Oh, yeah.
Spent a couple of days there. I know it was relatively short term and business orientated. Nonetheless, you mentioned that got to spend a fair bit of time walking around and really seeing what it was all about. So to kick us off, AB, what can you tell us about your most broad observations whilst there?
Yeah, it's always interesting. As an economist, I keep a pretty keen eye on the statistics. And, you know, they always say that stats don't lie. Well, 95% of statistics are said to be made up, so maybe they do. But, you know, comparing, what you see in the headline numbers to what you see on the ground provides a lot of validation, and it's an approach to investing I've used for an awful long time. Any of our clients that have been through boot camp with me, for example, know I love just walking around in the city and just really anecdotally looking around. And I think not everyone's got the luxury of being an economist, but everyone, or most people at least, have got the luxury of having eyes and ears. And if you look around in the right places, you can find some pretty good insights, I think, into what's going on. And interestingly, Mitch, the challenges that they're facing over there, they're really not dissimilar to ourselves. By and large, the fixation is on the cost of living, in particular fuel prices. I think it was $7 a gallon to fill the car up while I was there, and I've never seen anything close to that in my time in the US, just in the same way that we haven't seen anything close to $2.30 a litre here in Australia. So gas prices and generally the cost of living are the two things that people are really griping about and struggling. It's a genuine weight on people's shoulders. As always, everything in the US tends to be a bit earlier before we get it here, and we've already started a rate rise cycle too, so they've already started to feel the pain to an extent of higher interest rate rises.
It's interesting you say that, and I think it's important for our listeners out there too, is that it's twofold. You've got to know the numbers, but as you said, it's not easy to understand that. Having a looking around and walking to see things for what they are is the easier one of the two. When you combine them together, that's your magic formula to therefore make an investment decision. Now, we talk about here, AB, on the numbers side, given I spend most of the time on the trading desk, we talk about an inversion of the yield curve, and we won't go into detail onto what that is because we cover that in the weekly classroom. For example, a yield curve is when the short-term bond yields exceed the long-term bond yields, which is typically a leading indicator to a recession. In your experience walking around the US, would you say it felt like that could be where we're heading?
Yeah, look, I mean, if you sort of try and explain about the importance of bonds are a tricky beast, so we probably need to address that. I guess when you see short-term interest rates, effectively bond yields, higher than longer-term 10-year interest rates, that in itself is an anomaly because there's more risk further down the line, there's more potential for volatility, so normally interest rates into the future are higher than what they are in the short term. Now, obviously, we're starting to see that turn up, and that is creating a lot of pain for people, especially if you've got a society that is fueled on credit, where all of a sudden, repayments on your mortgage, for example, have started to increase, or repayments on your credit card, noting, of course, that Afterpay and so on are not really that prevalent over there at this point in time, are major issues for people, and it is starting to weigh heavily on sentiment. The US has enjoyed a cracking run. Economic confidence is incredibly high. The economy, the unemployment is in the 3% type level, at least according to the official statistics. When you look around and see literally tens of thousands of homeless people living in tents under every available bridge and in every available park, it sort of begs the question: how can there be 3% unemployment and all this homelessness? The stats, the way they're measured in America, of course, if you're not actively seeking work, then you're not included in unemployment figures, and hence why the number is as low as it would be, in that 3% range. So, your consumer is struggling right now in terms of a very sharp dent, if you will, on confidence, both, as I say, through that cost of living rise and now that spectre of higher interest rates. 2.5% interest rates, I think, within the next 18 months there, I would say, is a fairly safe bet.
Which is tough considering there's been a real lack of wage growth. And you mentioned, AB, in our talkings earlier today, that the gap in wealth is so obscene. You've got people living under a bridge, but then you've got others who are living in a $40 million mansion. How does that come into effect, and what does that mean then down the line for an economy?
Yeah, that's a challenge. And I think, for anyone that's traveled in the US, they've probably seen this firsthand. The wealth gap is astronomical. It's probably more marked, I think, than virtually any other country in the world. Maybe India would be the exception to that, but it's a very marked wealth gap. And in these times, I mean, since US interest rates have been zero, effectively, you've seen close to a 40% rise in property prices. You've seen close to 80% rise in the equity market. So for people that have had cash or have been invested, they've done exceptionally well over the last couple of years. And that wealth gap certainly has widened to probably what I would consider to be the widest chasm I can remember seeing. The challenge with that, if you look at, for example, crime and crime rates, are off the charts, particularly in some of the states like Oregon and California, which are Democratic states, and there's been a much more laissez-faire attitude to street crime or shoplifting and things of that nature. And there are people that are in a situation where they have no option. There is no option. If you want to eat, you've got to go and steal something. So that's really quite unsettling to see when we live in a country where, sure, there are people that go through economic hardship, but there's also a safety net there to try and stymie that absolute abject poverty. It really is confronting. And as you say, you look on the other side of the block and you've got somebody driving around in a $1 million car and living in a $40 million house.
It's crazy. There's a big wealth gap, so to speak.
Yeah, that civil unrest, I think, is not something that's likely to go away either. And typically with a Democratic government in the White House, the story is unification and bringing those two groups together. And I think that chasm has probably never been wider. It's really, really confronting. And when you see it firsthand, it's not looking at something on the TV. It really is quite unsettling to see. As a human being, it's just wrong.
These are remarkable observations, to say the least. But I guess the question I've got for you, AB, is at some point in time, this anecdotal observation will then have to reflect on the statistics. Nonetheless, there's always a lag factor. So would you be able to explain how that lag factor works when it comes to economic data? Okay,
so there are a couple of things afoot. If we take oil as an example and kind of just zone in on that one pain point rather than make this too broad. So when you see a spike in oil prices, it's exactly that. It's a spike, and people look at it and go, that's not much fun. But the lag effect of the impact of that higher price takes typically about 2 to 3 months before it really starts to impact on people in their budget and how they choose to spend their money. Most people, when you see oil prices going up, yeah, they'll come back, and so it's a temporary blip. But when it becomes more sustained, it becomes a major issue. And that lag factor is about 2 to 3 months with oil typically. So to give you an idea, if we look at oil prices and then car sales, higher oil price doesn't affect car sales for about 3 months. And then for the next 8 months, on average, you look back over the last, I don't know, I remember doing some research on this when I was working in London, so it's a bit dated, but typically for the next 8 to 10 months, you see a 10% drop each month on car sales because of that spike. That's the lag factor before it comes into the system. So the US government is working quite hard to try and remove that pain. There's a strategic reserve of oil in the US, which is obviously kept there in case of emergencies. And the government now are releasing 1 million barrels a day, which they've committed to doing every day for the next 6 months in an attempt to reduce, I guess, that pain that people are feeling on the back of higher petrol prices or gas prices, as they say, and that is going to take some time to have an impact. Now, the challenge is if they release those strategic reserves and it doesn't really do much to reduce energy prices, and therefore that lag factor on consumer confidence, 2 to 3 months' time, you're looking at a lot of pain and what effectively is going to be a real sort of quick pull-up, I think, on the US economic sentiment and the confidence in that, and you go from being in booming economic conditions to more of the twilight zone of, hey, which way is this going?
It's interesting you say that, and the points you make are really quite interesting because you start to connect dots with what we're seeing here in Australia, and it kind of makes sense.
Make no mistake, it's going to play out exactly the same way here. The only difference is our strategic oil reserves are actually held in the US for some strange reason. There we go.
So in terms of consumer spending, AB, on the basis of what we're seeing or what you've seen, you would anticipate that would decline.
Yeah, like one of the things, and I didn't get a lot of time to do it, but I like to have a walk around like shopping centers. I'm not a shopper, but I like to see what's going on. And my go-to if I'm in Los Angeles is the Beverly Center. And I've been going there for a long, long time, and it's the first time that I've ever been in there, and there's been vacancies in terms of shops. There's normally a wait list of retailers that want to secure space in that center because it's high foot traffic, it's a premium center. It's a good place to be if you're in the bricks and mortar space. And I think it's 7 or 9 vacancies in that center at this particular point in time, which is absolutely unprecedented. Never ever have I seen that before. And you think, okay, well that's a factor, but why is this? And then you look around and realize, well, I remember when I pulled in the car park, I parked right next to the lift, which again never happens. No one in the car park, and probably somewhere between 50 and 100 people in that shopping mall, whereas ordinarily it'd be a couple of thousand in there. So that's an idea of how dramatically different this trip was in terms of consumer spending, and I think the ramifications on there. If your household bill for fuel, gasoline is higher, your household fuel for energy is higher, your household bill for food, which has also just gone ballistically high over there, just like we've seen it here. They're the 3 pain points that people have as fixed costs. You have to buy food, you have to buy fuel. And so that money's got to come from somewhere, and that discretionary spend, let's go to the mall and buy some sneakers, let's go and hang out and get some takeaway. That's not happening. And you can see that now already. And if that gas price doesn't drop over the next couple of months with this strategic reserve being tapped into, it's going to get pretty ugly.
It makes a lot of sense. So if you're a trader, AB, and the question we're all looking to ask you is, we've got a reporting season coming up. And for those of you who don't know, our listeners out there, the US company's obligated to report 4 times a year, so quarterly. We've got one of those seasons coming up right now in the next week or two. What would you be then doing as a trader? What would you be looking out for?
Yeah, I'll be putting the hard hat on for this one, no question about it. One of the things that we've talked about is that full employment, 3% unemployment, and therefore full employment. And effectively what you've had is some significant wage pressure. Wages in America are very different. They don't have a minimum wage in the same way that we have in Australia. The minimum wage in Australia is about $25 or so an hour, roughly, I think. Someone will pull me up on that, but it's in that order.
Somewhere, yeah.
Over there, that number is really different. It's $6 or $7 an hour, and
it's not a lot, is it?
It's not. And I guess you rely on gratuity if you're in customer-facing jobs and so on. But parking that all to the side, there is quite substantial pressure in the labour market. Every single business I went into said we can't get staff. We cannot get staff, which is not dissimilar to the situation here in Australia. So seeing that evidence, knowing the economic statistics, full employment, inflationary pressures, rising interest rates, rising gas prices, and looking around and having it confirmed, I guess, anecdotally, walking around seeing things. The 3 areas I'd be watching very, very carefully in this earnings season would be, consumer staples and consumer services in particular, because if you're in a consumer service type business, your wage costs have gone up, but you're not necessarily going to have the pricing latitude to better pass that on to your customer. It's not like if fuel prices go up, garage charges more for fuel. If you're in a service space, it's a lot harder to pass that cost pressure on. So you're going to get some margin squeeze in that consumer service space. Equally, I think in the retail space, and particularly apparel clothing, I reckon you are going to see an apocalyptic result season where not only when the companies report are they going to talk about softer sales, I think the outlook, the guidance for the coming quarters is going to be pretty unpleasant reading. So with that in mind, having strategies like our favorite, the straddle, for the earnings season. So, if you see a drop, those puts that you've bought go up in value and you make money in that way. Positioning yourself with some shorter not shorter term time frame trades, but shorter the market trades that are bearish trades probably is quite prudent. Equally, around that, for your long positions in those less consumer-related stocks, good solid growth companies that have good quality earnings. You're not chasing high multiple tech companies, good solid utilities, that sort of stuff that's pretty healthcare, those sorts of things that are pretty lower volatility type plays would be very much how I'd set the stall out going into this result season. And there's going to be a lot to take out of this because it is a great precursor to what we can expect over here. It was a very, very sobering trip, just seeing the different aspects of poverty on one side, wealth on the other, which is always there, but even more marked. But looking at a really, I guess, doom and gloom type outlook in a country that's renowned for its optimism is quite confronting.
Yeah, it's a lot to digest there, and it doesn't sound awesome. I think the other piece of advice we can take from you just listening to this, reading between the lines, is don't travel.
Look, I think if and it was a dog's breakfast of a trip on a few scales. Yeah, well done to the team at the airline for doing what they do, but the bookends either end. The actual process of traveling is absolutely no fun. It was very, very draining experience for what normally is quite fun. Productive trip. Certainly there's going to be some good trading opportunities that will fall out of that. Hopefully this is enough to help our clients, set out their stand and capitalize on those observations. And remember, they're not just observations, they're also backed up with the economic data as well, which is pointing to the same thing. When those two circles overlap, and I can only really go off, the last sort of 25, 30 years I've been in markets, they tend to be good, high quality probability trades. So, take what you want out of this and just make sure that you're not on the wrong side of that result season, because I do think it's going to be, and particularly for apparel, where your cost of what's going into the garments, if it's clothing, is also going up because cotton prices, everything else are moving higher too. So brace yourself for not being a long-term investor and buy and hold, but being a little bit more nimble and a bit more active and very selective as to how you set your stand out. If you get that right, you're going to make a killing this quarter. Great advice, AB, and as always, research, get educated, know what you're talking about, and you can make these kinds of quality decisions. Absolutely, that's what it's all about. Best investment you ever make is in yourself. Couldn't have said it better myself. Thanks, AB. Absolute pleasure. There you have it, guys. Make sure you give us a review and a rating, and we'll look forward to hosting you next week.